Okay, thank you. Okay, so as an overview about this workshop, we're gonna revisit the think as an investor, passive versus active investing, asset allocation review. We're gonna like remember what is asset allocation because it's very important for us. And the bulk of this workshop will be in the section of active investing process. So how we're gonna do it, and I'm gonna give you some tools to help you do this strategy. And finally, we're gonna see some trading strategies. So as we said in the last time, this is the famous like slide that we have been seeing in all of this series of workshops, which is why people invest. And we said multiple times that we should invest in assets or in anything, any financial instrument which which is now undervalued and didn't reach its real value yet. How do we do that? By forecasting that this security will or have the potential to solve complex and big problems. And the last time as investors, we said that we should ask ourselves, does it work? Does it work? And the right answer should be no and not yet. And not yet is very important because if it's just no, we shouldn't invest in it. Whereas not yet is very important because if we said not yet, then we know that in the near future, we will be able to solve this problem and it will the price of the security will go up, giving us a high return. And we said also that we shouldn't judge some projects depending on their idea. Some projects were very weird or at first, but then ended up as really big companies and ideas that are accepted by all people, like Airbnb and Facebook at first. So even if something was weird or an idea wasn't like very much good, investors still take the risk and invest in it. So we said that how we think an investor and the question that we should ask is it there yet? Is there a demand for this project? So even if the project will work, will people need this project? And we gave last time an example about the coin BNB, for example, because here we are talking about cryptocurrencies. So all people will use the BNB coin. Why? Which is the Binance coin. Because when you have Binance coin with you, the transaction fees on Binance will be discounted. So all people will demand that product. So it's not like the product should work in the future, but also it should have demand. So people need this project. And of course, will it work in the future? It should work. And if it works, and if there is a demand, will that lead to a price appreciation? And most of the time it will, because when people buy something, automatically its price will go up. Now let's also revisit passive versus active investing. Like we said, we gave a small comparison last time. We're gonna see it again. But now let's see what is active investing. Also, we talked about active investing. So the process to active invest is basically coin selection. So select the coins which each coin have a project. And we were taught how to do that in INV 106. We buy the coins and basically we sell them at the future date. So these three steps belong to the passive investment, which we took a look at last time. So only these three steps. Now, active investing, we add three more steps, which is rebalancing when needed. Now we're gonna see what is rebalancing, changing coins when needed, and changing asset allocation when needed. Okay, and we're gonna take a look about these three. Just give me 1 second. Okay, so the comparison that we did last time is this. So passive investing, it needs less time. Why? Because as we said earlier, we buy something and we leave it there for some period of time. Less effort needed, like there is no need to always read the news and be actively working and reading and analyzing the charts in order to do it. And we said that the effort in passive investing comes in the beginning. So in the beginning, when we are coin selecting, there is an effort in researching about each coin or each project. I'm not, when I say passive investing or active investing and coin selection, it can be stocks selection. It can be any financial security, not just cryptocurrencies. So this works for all. And finally, we said that it have less risks, but it's at the same time, it have less reward. Now, at the other hand, active investing, we said that it needs more time because uh, as uh, as you see, we have 3 additional steps, which are active steps that you need to do every once in a time. More effort needed, of course, because these steps needs your energy, your work, your time. But it have more risk, but it have more reward if done right. Okay, so if done in a right way, following all the rules, you're gonna get more reward. But we said something that as a conclusion that we should go with the strategy which suits our lifestyle more. So not because active investing make more money, we should do it. It depends on our life. So even if you went to active investing, but you don't have the time and the energy to do it, you're gonna be losing money. And doing passive investment in that case will be a lot better than active investing. So depending on your lifestyle and the events which happens in your daily life, you choose either to passive invest or active invest. And let me here give you a small note. We are still talking about investing and not trading. So passive investing and active investing, they both belong to trading, to investing, sorry, which is basically like buying something and waiting some time to sell it. But we know that active investing is more active. Whereas trading, you buy and sell in the same day, maybe. Okay, that is day trading. So we are still in the investing part. We're gonna talk about the trading part in cryptocurrencies specifically, and we're gonna see what its conditions are. So yeah. Now let's review the asset allocation. So what do we mean by asset allocation? Basically, we talked about asset allocation. We said that we have 3 main ones, but you can make any asset allocation which is in between. Now, an asset allocation means that if you have an amount of money that you want to invest, let's say $10,000, you can choose one of these 3. For example, if I chose the conservative one, I'm gonna put 75% in Bitcoin alone and 25% in altcoins. And altcoins are any other coins other than Bitcoin. Okay. This means that if I have $10,000, 7,500 here and 2,500 there. Okay. Now this is conservative. Why we call it conservative? Because it's the most safe. Because Bitcoin have the slowest move. So when it goes up the slowest. For example, maybe altcoins today went up by 10%. You're gonna see Bitcoin just by 1 or 2%. Okay, so it's very safe because the movements are slow over here. Moderate asset allocation, 50 by 50. Okay, and an aggressive one, it's 25-75. And this is more riskier, but at the same time, you can know that it's more rewarding. Okay. Because as we said, these altcoins move faster. So if you have more in them and it went all 10%, you are making more money. But at the same time, it's more risky. Okay, and you can put anything in between, like you can put 60-40 and so on. And recommended that when you do coin selection, you split your entire account on 10 coins at least. Okay, so for example, 75% here in Bitcoin, and the 25% are divided on 9 other altcoins, maybe Ethereum, Cardano, BNB, 9 other coins. Which how do you choose these coins? Through fundamental analysis that I taught you in INV 106. Okay, now let's go into the bulk of this workshop, which is active investing process. How do we do it and the tools. So what we will learn today, how we will learn that basically, we're gonna see what is rebalancing our portfolio. We're gonna see the theory of it, and we're gonna see some examples. we're gonna see the impact of the stable asset on our portfolio. Stable asset meaning like the USDT. So there is a coin called USDT. It's always equal to $1. Whether the market go up or go down, it's always $1 stable. And we're gonna see alternating between coins. So when do we change our coins? Changing asset allocation. So when we do that, what do I mean here by maybe we first were using the 75-25, then we decided to change to the 50-50. It have some rules. We can't simply change that. So we're gonna see when we can change, and then at last we're gonna see some tools to help us active invest, because as I said, it needs a lot of time, calculations, and efforts, but we have a lot of tools which help us a lot. Okay, so rebalancing, what do we mean by rebalancing? Okay, rebalancing basically is adjusting our holdings, so buying and selling assets to maintain a specified or pre-specified asset allocation. What do we mean? So we're gonna see an example. Hang on with me. Why rebalance? We rebalance in order to sell the securities that went up and buy the ones that are still down. So when you rebalance, guys, you're gonna notice that you are selling at high prices, which is good, and buying at low prices automatically, like without you knowing about it, which is very, very good. It diminishes the risk by almost 100%. There is nothing 100%, almost 100%. And it increases profits in choppy markets. And what do we mean choppy markets? We mean markets that move sideways in a sideways trend, which I mean like it's alternating. It's not going up and it's not going down, like up and down at the same time. And today it's up by 10%, tomorrow it's down by 10%, in a way that it's always equal. So we're gonna see now through an example how this helps. So let's take an example over here. So let's say I have $10,000, okay? And my allocation is 50% Bitcoin and 50% IOTA. IOTA is a coin, okay? Now here I only choose 2 coins for simplicity, but as I said before, at least 10% we should divide it, okay? But for simplicity, 2 coins. Now, the asset allocation is 50%, 50%. So I must put 5,000% in Bitcoin and 5,000% in IOTA. Now, let's say the price when I bought at time 0, Bitcoin was $7,000 and IOTA was $0.5. I invested 5K here and 5K here. So the quantity is, now I have 0.71 Bitcoins and 10,000 IOTA coins. Okay, because 5,000 divided by this is that, and 5,000 divided by half is 10,000. Okay, so with $5,000 I can buy 10,000 IOTA coins. Now this was my initial investment. After some time T1, maybe it is 1 day, maybe 1 week, maybe 1 month, we're gonna see how to determine it, or actually like it's just an arbitrary, it can be anything. Let's say at price T1, Bitcoin dropped from 7,000 to 6,500, and IOTA increased from 0.5 to $0.6. Now the quantity here will still the same, okay, but the values will change. Okay, so this multiplied by this will equal to this one. So I had $5,000, it decreased to 4,600. And I had, and the price of IOTA increased, so my value increased. So I had only $5,000, now it's 6,000. Now these two, the total is $10,642. So basically the profit from T0 to T1, it's $642. But let's say I didn't sell over here. So I'm still holding my quantities, okay? I'm still holding my assets. I didn't sell them. And after another time, T2, prices went back to their initial values. Okay, so what will gonna happen? Also, my quantities will go back to my initial value. Now, let me ask you a question over here. If I were a passive investor, okay, I would have made nothing in terms of money. Why? Because I bought them here, 5,000, 5,000. This happened. I made some money, but I didn't sell. Then it went back to its initial start point. So I did nothing in terms of money as a passive investor. Now, and what would happen if I was or if I were an active investor? Let's say what would happen. So again, at price T0, the prices of these two coins were that much, the quantities were that much. And at price T1, the same happened. The price of Bitcoin dropped, the price of IOTA went up, the values are the same as before, the total is the same. Now, my new allocation over here, if I want to calculate it, will be, so the initial, as we said, our target is 50% to 50%. That was our initial target. Let's see what happened now. If we calculate the percentages now, so now I have 6,000 out of this is actually 56%. And 4,600 out of this is actually 44%. But these two should be 50%, right? So what do I do now? I must sell IOTA and buy Bitcoin in order to maintain a 50%, 50 to 50% asset allocation. Okay. Now, why IOTA here, the percentage increase? Because obviously it went up, the value went up. Bitcoin also, its value went down, and so the percentage went down. Now, even guys, don't be tricked over here. Even if Bitcoin went up, but IOTA went up faster, the percentage of IOTA will be higher than the percentage of the Bitcoin. Okay, and you will see that the percentage of IOTA went up, whereas the Bitcoin went down, but that doesn't mean that Bitcoin really went down. Okay, it can be only that IOTA went up faster, so that Bitcoin, it was lagging, although it was going up, and the total will be like the proportion of the Bitcoin to the total will be less, or will look as if it decreased. Okay, so any questions till now? Is everything clear? Okay, great. Okay, so what we should do, as we said, is that we have to maintain, as we said, the 50%, 50% asset allocation, the initial one. So I should sell and buy Bitcoin. So I must have 0.5 times that much, which is the total amount. So I must have $5,321 in each coin. I have $6,000 in IOTA, so I must sell. The difference is that much, dividing it by the 0.6 dollars, it will be 1,130 IOTA coins. Okay, so I must sell that much coins. Okay, and Bitcoin, on the other hand, also the difference is that much, dividing it by its price, I have to buy that much Bitcoin in order to go back to the 50-50. Okay. Okay, so let's see what is gonna happen next. The investment now is, as we said, this is the initial one. So let's see what is gonna happen if the price went back to its original. So if the price went back to the original, these are the new quantities, by the way, since over here we sold that much, and we have 10,000 initially, so 10,000 minus this, and we have that much Bitcoin because we bought, and their value now is $10,165.3. So I made a profit of 165, which is 1.65%. And this, we are not doing it only once, we are doing it consecutively. So 1% and 1% will add up to be huge amounts. Okay. So comparing passive investing to active investing, in passive investing, I did nothing. Okay. Whereas in active investing, I did 1.65% more. Okay. And the interesting thing in it is that as you do it more and more, your profits will get higher and higher with time. Okay. So this is about the rebalancing. Is there any question about rebalancing, or it's clear? Okay, great. Okay. So this can be made blindly. Okay, it never shown a bad historical performance in the past, and that's why a lot of companies basically automate it. Okay, so create like algorithms which automate it. And now at the end of this section, I will give you software which automate things for you. Okay, it is used by all investor traders and hedge funds. And the thing is that you can do rebalancing in any assets. Okay, okay, let me see that. Okay, clear. So if let's say you can, yeah, so I was saying that you can do rebalancing in any type of securities. So let's say you have $100,000, you can do rebalancing in markets, for example. So let's say I want to put 40% in stocks, 50%, 40% in cryptocurrencies, and 20% in Forex. Okay. So, and I invested in these three markets. If one of them went up and one of them went down, I can rebalance through these markets. And I can zoom in into each market as we are zooming in here in cryptocurrencies, for example, and do rebalancing again in each market alone. So you can do that. And it's very, very, very beneficial. And like all successful investors and traders do that, especially hedge funds, which are basically trading and investing companies. And yeah, so on more coins also, this is a good fact. On more coins, higher profits will be generated. So here we saw that on only 2 coins we did 1.65, but as you have like 10 coins, this will be around 6% or 5%, which is something that is very huge. And as we said, can be used in any market. But in crypto, exactly, it makes crazy returns, because crypto, we know that crypto market is volatile. So if things went up, it go up by 10%. If it went down, it go down by 20 and 10%. Whereas in stocks, it only go up maybe 1%, 2% a day. Okay. And now that's why basically trading isn't that much good in cryptocurrencies, because it's very volatile. So active investing or passive investing in cryptocurrency actually work the best. We're gonna see that. Now the good question is, when should we rebalance? Okay, so this T1 that we shows here. Yeah, so at T1 here we decided to rebalance. Why didn't we miss it, for example, and rebalance at T2? At T2, if we rebalance, we shouldn't rebalance because it's already there. But how didn't, for example, we miss T1? And why there isn't, like, T1 should be 1 week or 1 day or what? This is the question now. So when should we rebalance? Now we have 2 types of rebalancing. We have a time rebalancing and we have threshold rebalancing. Time rebalancing means basically, it's very simple, means rebalancing your portfolio at a specific interval of time. So I want to rebalance every day. I want to rebalance every week. You decide. You can even do it at 1 hour, but and on 5 hours. But it's proven not to do very good. So based on experience of traders and my personal experience, I recommend not using time balance actually, but the most one working with time balance is 1 week. Now, like, I don't recommend time balance, not because it's not good, it's because we have this threshold balance, which is more good. Okay, but the best, if you decided to time rebalance, the best will be like around 1 week or 2 weeks. Okay, this means that every 1 week, for example, or 2 weeks, you do the rebalancing. You see how much percentages have changed, and I will give you an Excel sheet which automatically calculate for you that thing, and it will do and you do rebalance to go back to your initial asset allocation. And one note here, guys. When you sell, for example, on 56 and buy on 44, you will notice with experience that here you are selling on the top and here you are buying on the bottom. And this is basically what you want, and like the most perfect thing that you can do in investing. Okay, now threshold rebalancing Threshold rebalancing means that you balance your portfolio when one of assets exceeds or lags from its optimal allocation by a specific threshold. Now let's see what does that mean, because like reading this for the first time will seem a lot hard. So let's see what do I mean. So example on threshold rebalancing, let's say my target allocation is to put 50% in Bitcoin, 30% in NEO, 19 in IOTA, and 1% in that VeChain. And we decided the rebalance threshold to be 2%, and you specify it. Now I'm gonna tell you what is the best one. So what is, for example, how do we do it? So if the percentage of Bitcoin changed to less than 48% or more than 52%, we should rebalance. Okay, so this is basically the threshold rebalance. Now I think the meeting will end in 10 minutes. If I automatically cut off, let's just join the same link again. Okay, so basically this is it, but there is something which is not logical over here. Why? Let's see why. Yeah, so why it's not logical? Because let's look at the 1% of VeChain. So it should go to -1 in order to do rebalance, for example, which is not logical. Or like another thing is that the percentage of NEO or IOTA that we have is a lot less than Bitcoin. So the 2% over here will be a lot lower than the 2% over here. So it's not too logical. So we have a way in order to scale it and make it more logical. And let's see what is this way. So therefore, the best way is to select a threshold depending on the percentage of the allocation of each asset. What do I mean? So let's take an example of 10% threshold. And by the way, the 10% threshold is proved to be the best. So I do a 10% threshold, and like I know a lot of investors who do 10%. Some of them do 15, some of them do like 7, but a lot of people say that like 10 is good. So if I set like 10% threshold, I divide this, I divide the percentage by this 10 for each coin. So for NEO, for example, I had 30%. So 30 divided by 10, it's 3. Okay. So what does that mean? When the percentage of NEO in my asset allocation goes below 27 or goes above 33, I'm gonna rebalance. Same for IOTA, but it's now 19 over 10, it's 1.8, 1.9, so less than 17.1 or greater than 20.9. Same for Bitcoin, it will be 10%, 5%, sorry. And this makes more sense because it's like weighted and more logical. Okay, so what is the risk of rebalancing? There is a risk associated with rebalancing, which is like imagine a coin or an asset keeps going down, okay, and when it keeps going down, its percentage in your asset allocation will keep going down. So it goes down and you buy again from it and sell from the ones that are high. Then it goes down again and you buy again from it. And if it will continue going down, your account will go down with it. Okay, so this is the risk. Now this could be an error in the coin selection process that you did, because if you chose a good coin that have a good team, a good project, a good roadmap, and everything what we learn in INV 106 applies perfectly, this coin shouldn't be going down forever. Okay, so this could mean that you have an error in coin selection. Or if this coin, for example, it was very good and then it went bad, then you should go out of it. And now we're gonna see this in basically changing alternating between coins in our asset allocation. Okay, now let's see the impact of stable coins. What do we mean stable coins? As I told you earlier, stable coins are coins like USDT, which are always stable. Whether the market goes up or go down, it's gonna have the same value. So let's take some example. For example, let's say we have a total of 10K. 20 in USDT, 30% in Bitcoin, and 50% altcoins, which are other coins. This will be the value, obviously. If the market, let's say the market went up by 100%. So the altcoins now will be $10,000 because it will be multiplied by 2. The 3,000 Bitcoin will be 6,000, whereas the USDT will remain 2,000. It will not be multiplied. Okay, so it will not be multiplied because its value will remain $1. It will remain the same. So now your asset allocation is this. So you have 55 altcoins, 33 Bitcoin, and USDT 11%. Now you should do here rebalancing, as we know, and you should buy USDT obviously because now it's less than usual. You should sell some Bitcoin and you should sell some altcoins. And here, guys, the market went up by 100%. So we are on the top. So what do you do now? You sell from these two and you buy more USDT. Okay. Now, after each going up, after each rise, there is a fall in the market, and this is the natural growth of the market. Now, when the natural thing happen and prices go down, okay, what will happen is that you have a lot of USDT which have high value, okay, and have the same value. So USDT will have the same value, and the other coins will go down. But the thing is that before that happened, you bought a lot of USDT, okay, and when the price go down, now you can change. So you will sell the USDT and you will buy more coins of these. So you will end up in a better scenario if you have a stable coin in your portfolio. So I always have like 10% of USDT or 15% in my account as USDT always. Okay. So alternating between coins, what is the definition? What do we mean by that? It's the process of getting out of a coin completely in order to get into another coin that has a better return potential for a given period. And this is what I was saying like minutes before. If there is a coin which is going down, for example, you should change it. You should get out of that coin and search for a better coin. And when will this happen? This will happen when you see that a coin in your coin selection, maybe it didn't become bad, but it just has no major events or upgrades in the future that will push its prices higher, while you spot another coin having that potential. Okay, so you get out of this coin and you go and buy another coin which have higher potential. Now, this doesn't mean that the coin that you had earlier is bad, okay, but it means that in the future time it doesn't have that big events which will push its prices higher. So this is about coin selection, alternating coins. Now, changing the asset allocation. Now here we should be careful because this is used only in major events or extreme events in the market, like a crash or a sudden high peak which suddenly happens. You should change your asset allocation, which meaning the distribution of percentages on coin, you should change it. The remark is that this is a very advanced technique and you shouldn't use it as a beginner in rebalancing technique. And even professional traders do mistakes in changing the asset allocation because it's very risky, and like you don't know, like if a market crash, you don't know that if this is the bottom yet. Maybe it will crash even more, or if it's a high peak, you don't know if it will go up more. So this is why here there is a lot of uncertainty, whether in technical analysis or fundamental analysis, because in technical analysis, for example, this haven't happened before, so you can't depend on historical events. And fundamental analysis, when things are just happened, like all people are lost in the market. So it's very hard to use this. Okay. Let's say an example. So an asset allocation was this much. Let's say the market spiked up. Okay. So I know in the near future it will crash. So I changed my asset allocation to be more conservative. So for example, I state that now I will have 30% USDT. I will keep the Bitcoin and I will lower the altcoins because they are the ones who moves fast. Okay. And basically, this is the table for assets allocations when you want to change it. So very risky, regular, conservative, and very conservative. I think we have less than 1 minute. So when I cut, please rejoin the link. Okay, so for example, if the market went down, you start using these. And if the market went up, you start changing to these. You can be very conservative, which is very safe. And as you see, when you are very conservative, if the market went up and it spiked, if you are very conservative, you stack a lot of USDT and you lower the percentage of altcoins. Whereas if the market went down and you are very risky trader, you want to take risks, you do the opposite. So you stack a lot of altcoins because they move the fastest when things go up, and you lower your USDT. Okay. I always recommend, like, at least in the beginning level, to alternate between those